Bitcoin, Ethereum, and now Ripple. With everyone crazy about Bitcoin, once unknown cryptocurrencies are being thrust into the limelight, the latest being Ripple, currently second on the market. Ripple is both a payment network and a cryptocurrency. It uses blockchain technology, but is differentiated from other platforms by its ties with legitimate financial institutions. Ripple's currency is known as XRP and is not mined by users. The company has control, initially creating 100 billion coins, with 38 billion currently in circulation. The rest of the coins will reportedly be released into the market gradually, up to 1 billion XRP tokens a month. Other cryptocurrencies have a stored value and can be used to buy goods and services, but XRPs mainly cover transaction fees as an anti-spam measure and are destroyed soon after. Ripple's main purpose is to facilitate global money transfers. Banks take 3 to 5 days to process cross-border payments, but transactions on the Ripple network are cleared in only 4 seconds. The platform also boasts low fees and can handle up to 1,500 transactions per second, compared to only 7 on Bitcoin. By and large, the core function of Ripple is markedly different from other cryptocurrencies available on the market. Whether or not it's a good investment is another thing entirely. Keep watching for more on cryptocurrencies.
Blockchain technology could transform the internet. Volatile cryptocurrency markets have experienced massive gains in recent months, followed by huge dips and then subsequent signs of recovery. You may have heard of cryptocurrencies like Bitcoin and Ether, or of the blockchain technology that underpins them. But what exactly is a blockchain? A blockchain is a digital database managed by a decentralized network of computers. The blockchain records transactions chronologically and publicly. Distributing data through a peer-to-peer network hosted by millions of computers makes it far less vulnerable to hackers than a centralized network and protects files from getting lost. When a user requests the transaction on the blockchain, it is broadcast to the peer-to-peer network of computers, known as nodes. The nodes validate the transaction, then combine it with other transactions to create a new block of data for the digital database. That block, which is both permanent and unalterable, is then added to the existing blockchain and the transaction is completed. The most well-known type of blockchain transactions probably involves cryptocurrencies such as Bitcoin or Ethereum, which has a value token called Ether. More than 900 cryptocurrencies are currently traded on the internet, and the market is notoriously volatile. Blockchain technology can also be used to record transactions for digital information, or records like land rights and medical files. It may also have a huge impact on the Internet of Things. According to CNBC, recent drops in the cryptocurrency markets have been driven by profit-taking after Ethereum's exponential surge, uncertainty about a potential split in Bitcoin on August 1st, and startups selling large amounts of Ethereum after raising millions in US dollars of the digital currency.
The bubble is bursting. Cryptocurrency Bitcoin swelled to $11,000 per coin on Wednesday, prompting intense speculation about the latest bubble and how and why it could soon pop. Developers divided on how to upgrade the Bitcoin network have led to fragmentation of the original currency into different versions, too much of which could be a problem. Bitcoin's history of being used to buy illicit materials from the dark web means regulators are watching and could crack down any time, especially if it grows big enough to impact a nation's monetary policy. As an intangible asset, Bitcoins have previously been targeted by hackers and may again fall victim to digital theft. Though the value of Bitcoin is volatile, at the moment it's at an all-time high. But because the supply is virtually limitless, there is a risk of collapse in value if demand should ever go down. Experts have likened the Bitcoin craze to the dot-com bubble, tulip mania, and other economic bubbles, all of which burst spectacularly. If they're to be believed, Bitcoin's downward spiral is only a matter of time. Bitcoin going bonkers, but when will it burst? Bitcoin has been on an absolute tear this year after passing 9,000 and is currently closing in on the 10 grand mark. Analysts say the Chicago Mercantile Exchange's decision to launch Bitcoin futures has fueled buying in December. The value of the 16.7 million Bitcoin units in circulation now exceeds 160 billion US dollars, which means the digital currency's market cap is greater than IBM, Disney, or Mickey D's. The cryptocurrency shows no signs of slowing. Not only are retail investors jumping in, but hedge funds have even started including Bitcoin in their portfolios. Many also warned that Bitcoin's meteoric rise will soon come to an abrupt end and pop like many other speculative bubbles before it. Sure, but when? Wall Street can't wait to bet against Bitcoin. With Bitcoin up over 1,500% this year, Wall Street traders are itching to get in on the action. But not to buy Bit, to short it. The largest U.S. options exchange, CBOE Holdings, announced that it's teaming up with the Winklevoss twins' Gemini Trust Company to create Bitcoin derivatives. CBOE will use Gemini's Bitcoin data to create futures on Bitcoin. Essentially, this will allow a lot more investors to bet on the movement of Bitcoin without actually having to own any of the underlying asset, Bitcoin. This is where it gets interesting. Short selling Bitcoin can be way riskier than owning the asset yourself. When you own the asset, the most you can lose is your initial investment. When you short sell an asset, like Bitcoin, your losses could be infinite, limited only by how high the price goes. Let the games begin. Cryptocurrencies are so hot right now. Bitcoin continues to barrel ahead at a blistering pace as analysts continue to predict that we could be looking at the greatest speculative bubble of all time. Virtual currencies continue to gain in value as Bitcoin hit another all-time high on Tuesday, as investors now hope to break the $20,000 mark. The interest in Bitcoin also helped Litecoin and Ethereum break new marks. Litecoin gained more than 40% to $312, while Ethereum hit $600 a token. Due to the huge surge in traffic, cryptocurrency trading platform Coinbase had to temporarily halt trading on Litecoin and Ethereum. Coinbase's status page showed both cryptocurrencies were experiencing major outages. But as digital currencies continue to set new records, many analysts are concerned that the speculative bubble will eventually burst. Clearly, putting all your eggs in one basket and dumping everything into digital cash right now is the way to go. What's the worst that could happen?